Are you tired of doing investment research on stock markets? Want to spend time on your hobbies or go out with your friends instead? Introducing iCapital, where you can get independent, objective, and comprehensive investment advice on the go. Available in English and Mandarin and can be accessed via app, website, and print copy. We provide thorough, first-hand research-based findings on listed companies, economies, and stock markets, and clear perspective of how markets interact and how they influence investments, as well as provide Malaysian and global stock recommendations, stock portfolios with outstanding performance to follow. Subscribe now to iCapital for stock news. From only 49 ringgit a year, start investing like a fund manager. Subscribe now at www.icapital.biz.
Hi everyone, Teng Boo from Capital Dynamics. Good to see you all again. The topic for today's video is very investment focused. It's something that I think most investors would be interested in and should be listening to, because we have opinions, we have analysis which can differ quite substantially from the other investment houses. So what we're going to ask is the US already in recession? And for you all, what is more important could be the question as to whether the Nvidia AI bubble, is it over, is it busted? And also related to the state of the global economy, will China once again save the global economy? So please stay tuned, listen until to the end, because it's going to be something that might be very helpful for your investment, for your business, or for your own career strategy. So about a month or so ago, in July, in our iCapital publication, we already warned our subscribers that US economy will see a recession in 2024. Even though if you look at the GDP numbers, they still show you positive. Now that's the thing about economic conditions. Very often the GDP number will be positive, or even your employment market might still be positive, but it hides a recession that is already unfolding. So the key thing is, as an investor or a business person, or if you're worried about the ringgit versus US dollar exchange rate, you need to be able to look forward and look for signs whether the US is already in recession or whether it's a soft landing. So many people say that it is a soft landing, but at Capital Dynamics, we take a different view. This is what we wrote in July, that's about a month ago. Many of the leading indicators, traditional leading indicators, point to a US recession, even as far back as 2023. We actually expected a US recession in 2023. But our mistake, what we got it wrong was we underestimated the strength of the US consumers. Now, the global economic situation ever since the pandemic broke out has changed in many ways. It has affected the global economy in ways that traditional analysis may not work, or we as economists or analysts may not be able to understand or comprehend the changes that have occurred. So it's very tricky. The prevailing economic circumstances, whether in Malaysia, globally, it's hard to figure out. It's very confusing. So what we're trying to do is to share with you what we think is happening. what we think the financial markets, especially the US stock market, is missing out. Here is the ISM manufacturing PMI. The PMI is the Purchasing Managers Index. It is a leading indicator for the US manufacturing sector. The latest figure is July. This was released a few days ago, July 2024. It plunged to 46.6. This PMI has been, anything below 50 says that the manufacturing sector in the US economy is in recession. So this indicator has been telling you that the US manufacturing activities have been in recession since the last almost 2 years. So in the last 21, 22 months, the PMI has been negative. But the one in July this year, it plunged, and this is pretty sharp. Now, the manufacturing activities make up only about 10-11% of the US economy. So you may say, well, that's not really a big deal. Then what we do is we look at the services PMI. This is for the services sector of the US economy. The US services sector is huge. It makes up about 80% of US GDP. So whether the US economy is growing or not growing, you have to understand what is happening to the services sector. Now, as this diagram shows you, the ISM services PMI plunged. The latest figure we have is only June. July hasn't come out yet. For June, it plunged to 48.8. Now, if you look at this chart here, the services PMI has generally, has almost every month been above the critical 50-point level, which means the services sector is expanding. So June is not only the sharpest contraction since April 2020 when pandemic just broke out, it is also the plunge from May to June is extremely sharp. So what the services PMI is telling you is that the services sector of the US economy is already contracting. So you have both manufacturing and services both contracting. That makes up almost the entire US economy. Now, what is also worrying is that the US labor market is weakening fast. It's not just services on the output side, on the manufacturing side, but the employment side. This diagram is the initial claims based on a 4-week moving average. This is released every week, and it is a leading indicator of the US employment market. If you look at it on a weekly basis, it's very volatile. So you can't really see the trend. So what analysts, economists do is we take a 4-week moving average to smooth out the volatility so you can see the trend more clearly. And here on the right hand side, the figure, the 4-week moving average, includes the initial claims, the latest initial claims for the period ending 27 July. So it jumped up to, on a weekly basis, to 249,000. On a 4-week moving average, it increased to 238,000. As you can see from the chart here, right, in the middle of 2023, the 4-week moving average also moved up and then it improved. This time, it is also deteriorating, and you may say it might improve again, like what happened in 2023. The difference is if you take into account the other indicators, like for example, the services PMI, they are all pointing in the same direction. So, and of course, just before the initial claims were released, the ADP, which is another source of employment data, shows that the number of new jobs created for July was weaker than what was expected. So all in all, the labor market is showing signs of weakness. The one thing that you need to look at is the US unemployment rate. It is at the moment 4.1%. That was the last one. So the latest one should be due on Friday night, our Malaysian time. If that unemployment rate goes up to 4.3, 4.5, then that would also confirm that the US recession based on another leading indicator. This leading indicator has got a track record of being 100% accurate. So you watch and see the unemployment rate number, and we can help you have better insights into whether the recession is already underway. Leaving aside the US economy, whether it's in recession or not, and how severe the recession will be, is that at the same time, Nvidia, I'm sure most of you know this stock, the mother of the present AI bubble. Looking at it from different angles, it looks like it's heading for a crash. Nvidia, the maker of AI chips, how can it be? Now, if you look at the monthly chart, this is the chart of Nvidia from the day it was listed. From 1999 up to about 2000, you can't see the share price because it's pretty flat. Then from about middle towards the end of 2022, the share price of Nvidia went surge in a parabolic manner from about $14 to about $140 in about a year and a half. This type of rise is not sustainable, but that is based on the chart patterns. Right? What we can do is to look at the fundamentals. Now, before I do that, I need to point out to you this very interesting chart of Nvidia. This is weekly chart, and you can see at the top is the weekly MACD. It has become bearish. It has been bearish before, but this time when it is bearish is different, because if you look at the bottom part of the chart, which shows you the share price of Nvidia, you can see two blue lines. That is the channel lines, and the share price of Nvidia currently is about 110, is right at the major resistance area, together with a bearish MACD. So from these two charts, you can roughly conclude that the best for Nvidia, well, at least in the coming 1 or 2 years, is over. Then let's look at some figures, some financial figures, right? This chart that we showed you just now shows that the price of Nvidia can plunge from about 110 to about $30, which is about 72% plunge. Can such a collapse happen? Isn't the AI sector supposed to be crash proof? You know, everybody's crazy over it, the data centers, the chips, and so on and so forth. So how can it be that given such bullish fundamentals, the share price of Nvidia can drop so much? Well, let's take a look. This shows you the sales and the gross profit and the gross profit margin of Nvidia from the first quarter of 2020. Ignore you look at the part which is where we have a red box. That part is when Nvidia started to enjoy the benefits of its AI GPU. The previous quarters were all more of the gaming, the GPUs used for gaming and so on. So it is that red box where Nvidia is transformed in terms of sales. From first quarter 2024, sales revenue was about $7.2 billion. 1 year later, it was $26 billion. That is a jump of 3.62 times in just 4 quarters. The gross profit jumped from $4.65 billion to $20.41. Gross margin jumped up from about 60% to almost 80%. This is the same thing, but in a visual form, so you can see it more clearly. So you can see the gross margin improving dramatically, and you can see the gross profit, which is in red, the total revenue, which is in blue. So the gross margin is so high that Nvidia's gross profit is almost quite similar to the sales figure. That is incredible. It's very impressive. Of course, before that, before 2022, Nvidia's performance, sales and earnings, it was still growing, but not so impressive. Now, I should zoom in for the last 5 quarters, Q1 2024 to Q1 2025. If Nvidia were to grow its sales at the same rate as what it did in that 4 quarters, the sales in FY 2026 will go up to about 94 billion US dollars, and by 2027, sales will be a huge 341 billion US dollars. Okay? Is that possible? I mean, what's the implication of that? So what it means is that the gross profit, if you remember, jumped from 4.65 billion in the first quarter to 20.4 billion in just a year, right? The gross profit of Nvidia jumped 4.39 times. So let's assume that Nvidia continues to see the same rate of growth in its gross profit. By FY 2027, which is 2 years later, Nvidia's gross profit will be 393 billion US dollars. Is that possible? Well, if that is the case, by 2027, Nvidia's gross profit of 390 over billion US dollars will actually be more than Nvidia's revenue. This is mathematically impossible. Even Jensen Huang cannot do magic, right? Well, let's move on from there. These are the one on the top right, the one with the yellow border, that is the current H100 AI chip that is selling like hotcake. Nvidia has also launched 2 new super chips, the GB200, the Blackwell, both the Grace Blackwell and the Blackwell B200, they are both the new super chip for AI purposes. And this will be more powerful, more expensive, and of course will be, I suppose, capturing some of the sales that will go to H100. What we're trying to show you is that the industry is moving at a fast pace. Now, for Nvidia, on the demand side, there's also some uncertainty. Remember, we said that the US economy is already in recession. So, leaving that aside, the AI capital expenditure of the technology giants, of the Microsoft, of the Amazon, and so on and so forth, they are so large, they are not sustainable. Now, that is without a recession. So if you add on a US recession where business spending will slow down, consumer spending will slow down, advertising spending will slow down, then you find that the growth in demand would not be what the industry would expect. So what we're saying is that this parabolic surge in Nvidia's stock price has gone way ahead of its underlying fundamentals. And the simple business realities of demand and supply will eventually bring the stock price of Nvidia down to a much more realistic level. So in short, if you ask me whether you want to buy Nvidia because it's followed at 110, it's dropped about $35 from the peak of about 140. Should you buy? Should you just hold because there's so much potential apparently, or should you sell? Now, I'm not an Nvidia investor, but looking at the facts and the figures, I would prefer to sell Nvidia rather than to hold on. My reasoning is simple. Nvidia and gloves. How are they similar? In July 2020, that was when the pandemic was getting worse globally. Every country was affected. And glove stocks were going up, the share price of glove stocks were going up like crazy because there was no vaccine still. So demand was assured for gloves at that time. Supply was a big question mark. You do not know how much will come on stream, who are going to be the new producers, what is the capacity expansion, and so on. What I'm trying to explain is that the two businesses are similar in the sense that they are of a commodity business. Yes, Nvidia's AI chips are technologically superior to all its competitors. Even AMD cannot really compete with Nvidia. But at the end of the day, it is a commodity. It is not like you buy an Hermes bag or you go and buy a Ferrari where you have brand value. No. Commodity means that, well, when there's a shortage, the business will boom. When there's a glut, the business will suffer. That's what happened to glove stocks, because demand was strong, but supply came on stream so fast that it overwhelmed the growth in demand, and average selling price of gloves plunged, and of course the glove companies got affected. Same thing for the semiconductor industry. Whether you're Intel, whether you're Nvidia, whether you're AMD, you are still basically selling a commodity. And the trouble with the semiconductor industry is that the supply side is even harder to predict. It takes many years to build a new foundry. You do not know when will be the next innovation, what other types of processors will be brought into the market so that you can compete with Nvidia's H100 GPU. And like I said, on the demand side, when the business slows down, because at the end of the day, whether you're AI or non-AI, whether you're in the semicon industry or whatever it is, eventually you will still get affected by a recession. The demand will slow down. For Amazon and Microsoft, will a US recession also hurt these stocks? Yeah, I think so, because at the end of the day, like I said, the spending from consumers, businesses, advertising will all slow down, and these companies depend on these sources of demand. If you look at the chart of Microsoft, it doesn't look pretty either, right? The share price made new highs recently, but the MACD, which is at the bottom, the red and blue line at the bottom, the monthly MACD, is not. In fact, the monthly MACD is now turning down and most likely will turn bearish. When that happens, what it means is that the MACD and the share price of Microsoft, there is a bearish divergence. That is a very negative, bearish signal. Let's look at Amazon. The same technical situation faces Amazon. Same thing, share price made all-time high, but the MACD at the bottom, the monthly MACD at the bottom, is also turning down, also potentially forming a very major bearish divergence of Amazon. So stocks like Nvidia, Amazon, Microsoft, Meta, and so on and so forth, they got big weightages in the US stock market indices. A bear run on these stocks will definitely drag the S&P index down massively. Let's take a look at the S&P 500. This is also over the long term. As you can see, this is also monthly. The S&P is also testing a very strong resistance area, and the monthly MACD is also starting to turn down. The same thing is for the Nasdaq. The chart is also monthly. MACD monthly is at the top. The index, the composite index of Nasdaq is at the bottom. You can see the same resistance, the same bearish situation that Nasdaq is facing. Then just to link to the US recession is the Tokyo stock market. The Tokyo stock market has been a favorite for many foreign funds for quite a number of years, and that's partly because the Japanese yen has been weakening, plunging. I mean, that's the reason why many of you have gone to Japan, because things have gotten cheaper because of the cheap yen. Now the trouble is this. We, iCapital, in our publication, we've been warning for many months now that the Tokyo stock market is in a huge bubble. Because with the US recession coming in and with the US Federal Reserve expected to make its first rate cut in September and a few more after that, the US dollar will start to weaken. It's really weakened. And the yen will start to strengthen. So what we have for Japan is that the bullishness that we saw in the last few years will now reverse. So with a US recession, the yen will now be on a multi-year bull run, right? That means US dollar is on a multi-year bear run, and that means a crash on the Tokyo stock market will not be surprising. Our advice is sell your Japanese stocks, sell your Japanese funds. In fact, we would also advise Warren Buffett to do the same if he's listening to our YouTube channel. The situation facing the Shanghai stock market is the complete opposite of the New York stock market, of Nasdaq, and the Tokyo stock market. Here, you see this is the Shanghai Composite. The monthly MACD is bottoming out. It's not bearish. It is bottoming out on the right hand side here and trying to turn bullish. And if you look at the index, it is not like what you saw in Tokyo or Nasdaq or S&P. It is at the near the level of its major support, which is shown by the blue line. So downside for the Shanghai stock market composite is very limited, but upside is very, very interesting. So let me also at the same time share with you a fact that most people are not aware of. In 2009, China saved the world economy from collapsing, mainly because the Chinese government at that time, if you remember 2008-09, there was this panic created by the collapse of Lehman Brothers, and US, Europe, Britain, Japan, Singapore, Australia all faced a dramatic recession. So China at that time launched a huge fiscal stimulus program, the largest that China has ever undertaken. That reversed the contraction and boosted a lot of economies all over the world, particularly countries like Indonesia, Australia, Canada, Brazil, because that fiscal stimulus pushed up the price of oil, pushed up the price of copper, and so on and so forth. Then, recently, in 2022-2023, China again saved the world community, this time from a serious socio-economic crisis in the form of surging inflation. If you remember, many countries, in fact most countries in the world, were facing cost of living crisis, including Malaysia. Even up to now, the cost of living crisis is still affecting many countries. Now, that could have led to many governments being toppled. But what China did was, in that 2022-2023, is that the Chinese government refused to implement the same bazooka type of fiscal stimulus that you saw in the United States, in Britain, in Singapore, in Japan, and Australia. So as a result, there was hardly any inflation in China. So in other words, because China refrained from that kind of irresponsible spending, there was not a synchronized inflation crisis. Had China done the same as America, today, in August 2024, we all in the world would still be facing an inflation crisis. So now, that is 2009 and 2024. What we're saying now is that the situation facing the US now, it's very, how would I say it? It's very unusual, because the Federal Reserve has a lot of room to cut the interest rate. From 5.25, they can cut down to 0 if they want to. But the US government Even though the GDP has been growing, even though unemployment rate is so low, the US government has been facing an extremely high fiscal deficit, right? For the financial year 2024, because the fiscal year for America ends in, it starts in October. So for fiscal year 2024, the projection is that the fiscal deficit for America will be more than 7%. Now that is unusual because the US economy is supposed to be strong and growing. So why are you having such a high fiscal deficit? That is very unusual. Even for a country like Malaysia, where we had a lot of political changes in the last 4 years, our fiscal deficit as a percentage of GDP is only about 5%. So, should the recession in US happen now, where is the US government going to find the money to undertake fiscal stimulus? You can't. Your borrowings are already more than 100% of GDP. Your deficit is really going to be 7%, which is higher than a lot of developing countries. And a Trump presidential victory will make the US economic condition even more precarious and even more complex. So let me just show you a diagram first. This is the fiscal deficit of the United States from about 2000 to 2023. The last time US had a surplus was in 2000. That's a long time ago. And then you saw in 2020 when the pandemic hit, the fiscal deficit was about 15%. So now it's narrowed to about 5-6%. But this year it's supposed to go up to 7+%. That is very unusual for such a large deficit in such a supposedly strong economy. Then the US recession will affect Japan and other vassal states of America like EU, South Korea, the Philippines, right? On the other hand, with the decoupling that is really undergoing with the US, the Chinese economy will be resilient and the Chinese economy will be able to sail through another US-led global financial crisis, just like in 08-09. Xi Jinping has very wisely refrained from implementing the bazooka type of fiscal policy undertaken by many countries. Because of this highly disciplined and very patient Chinese government, so should there be another global financial crisis, the Chinese economy is in an excellent position to make use of their fiscal reserves to support Chinese economic growth and development. And even the People's Bank of China, that is the Central Bank of China, has plenty of room to loosen its monetary policy. It can lower the RRR, the reserve requirement, it can lower the interest rate some more, and so on and so forth. Or it can even do quantitative easing if it chooses to. So what is the result? The result is that we may see China again saving the global economy for the third time. I think it's something that is within the realm of happening in this year or next year. So as the United States and her vassal state get busted again, will China be your precious gold mine? That is the interesting angle to a US recession. Now, I just want to share with you, I've just very recently started buying Chinese property stocks, Chinese semiconductor stocks. Am I crazy? Chinese property stocks? Well, you know, the crisis facing the Chinese property sector is huge. It's gone on for many years. But the Chinese property sector will not disappear. It's going to be extremely important and it will recover. The thing is, what Chinese property stocks do you buy? What Chinese semiconductor stocks do you buy? America is taking all kinds of sanctions, all kinds of restrictions to restrict China from having access to semiconductors or semiconductor equipment or whatever it is. So why am I crazy buying these stocks? Well, let me just remind you, we have a talk on 7 September 2024 about the Chinese economy, what is happening to China, what is happening to the Chinese stock market, and if you are interested to understand and to identify opportunities which are low risk, high return, then come and join us on 7 September. And because this is a special, how would I call it, promotion or whatever it is, now for this very limited time frame, we have this special promo code. The event, the standard price, the normal price for this stock is 3,000 ringgit per person. But if you use this promo code that you can see here, you pay only 1,500 ringgit. So if you think that we are right, that the US is going to head for a recession, that those stocks are going to plunge and dragging down places like the Tokyo stock market, and you still want to have good, attractive, safe investments, and like I said, I think China is the place. If you think that there is a lot of sense in it and you want to find out more, then please join us. So before I go, let me just ask you to please like our channel, please share. I mean, whatever we said today about US recession is not a consensus view. Whatever we said about Nvidia and the AI bubble being busted is also not a consensus view. Some of your friends, some of your colleagues may benefit, may appreciate whatever you're sharing with them. And also, for those of you who have not subscribed to our YouTube channel, please do. Please help us increase our subscribers from 10,000 to 100,000 as soon as possible. So with that, I thank you again, and if you want us to comment on any topic, please let us know. Have a good week ahead.